Fed meeting and its favorite inflation gauge. Bill Baruch joining us now to set you up. Bill?
Thanks, Judge. I was on here in October and November calling for 10-year yields to rise to 1.25%. We basically got there. Now I'm looking at next week. The Federal Reserve concludes a two-day policy meeting on Wednesday, and the preferred inflation indicator, the PCE, is out on Friday. Now, I do think inflation starts to show up this year, and I do think the Federal Reserve is thinking about tapering bonds at the end of the year. Will we hear that discussion reemerge on Wednesday? Now, as well, I think they're okay seeing the belly of the yield curve rise a little bit and keep the shorter end suppressed. That means 10-year yields can rise. We don't trade the yields, though. We trade prices. The prices are the inverse of the yields, and they trade in half ticks. There's 32 full ticks in a point, and each point is $1,000. Looking at the chart real quick, I do think that after selling off sharply in January, we then had a sideways consolidation, and we're due for one more flush. Now, I'm looking at playing it by using the March 10-year futures, selling at 137, with a stop up at 138, risking $1,000. My downside target is 134.5 and a $2,500 profit.
All right, we'll see what it does. We'll talk to you next week after the Fed meeting.